Hey everyone, in today's video we're going to look at three different stocks from three different sectors and which will potentially do well in the coming days and the coming months. But before we get into the stock itself, I'm sure a lot of you would be wondering, the markets have been falling, the markets have been not going up of late, and some of the stocks have hit stop loss. Yes, Moraban has its stop loss, but if you do want to check out the other three stocks, NMDC has done well, Giant Agro has done well. The video link would be available right at the top right corner. You could find the video link, and do refer to that video in case you're still interested in investing in the three stocks, because they've been doing really well even though the markets have been falling. But apart from this, today I want to take the first few minutes to tell you a few things. Right, the first thing is, in such kind of markets, weak markets, we're going to always have one or two stocks that are going to hit our stop loss, but do not fret about it. Do not get afraid thinking that markets, all our stocks will hit stop loss. Now that's one of the key reasons why most of retail investors fail, because we don't stick to our rules. Now, in case stop loss is hit, if there are stocks which are hitting continuous stop losses, what you need to do is probably cut down on your positions, wait for entries. Don't jump into a new stock immediately. Wait for the markets to consolidate, stagnate, and let the market show that the market is ready to move up again. So if you can follow this one simple rule, cut down on your losses, and if you have too many stops hitting, cut down on your positions and wait and have some patience before you take the next trade. This rule alone can help you save some of the money that you will be losing in case markets continue this fall going forward. Okay, but before we also start into this video, I also want to show you what the markets are currently doing, and let's take a look at that before we jump into the stocks video for today. So Nifty has obviously been going sideways since that top in October. It has been going sideways. Now I don't see any problem in Nifty unless we go below this level of 16,800, right? Unless we don't close below 16,800 on a weekly basis, there is no reason to worry yet. But however, the small cap index or the mid cap index is potentially very key zone. Again, as I always say, look at weekly charts. You might get some really good idea on where the major supports are. Right now, what I'm looking at here is also a similar kind of level. So unless we don't close below 10,500 odd levels on a weekly basis, or even 10,300 levels on a weekly basis, I still feel that this is just a sideways market. While a lot of stocks continue to underperform, like many stocks like Solara has been hitting lower circuits, Neuland Laboratories and many other stocks in the pharma space have been correcting. But there are some sectors which are still doing well, like the banking sector, like the real estate sector are still doing well, right? So you could still focus on these sectors, and even chemical stocks are doing well. So you could focus on these sectors and try to find your next entry in the stock that you want. Okay, so I just wanted to give that update because a lot of you have been asking, will the market continue to fall further? Unless the levels that I mentioned are taken out, I still see every possibility for this market to head higher again. Now, obviously, there has been tensions between Ukraine and Russia, and that's kind of affecting the markets a bit. But even in the US markets, the support has been holding. For example, if you take a look at Dow Jones, which is a key index in the US, even there, we are not seeing the markets going below the zone yet, right? So definitely, I certainly feel with a high probability that markets will tend to head higher from here. Okay, so that's the update. And today we're going to look at three interesting stocks, right? As I always say, when you pick up stocks, you need to look at fundamentals plus technicals. So today what we're going to do is we're going to look at three stocks. What are the fundamental analysis? And during the fundamental analysis, we're going to look at a few things like we always do: analyze the ratios, analyze the profit and loss statement, and see what the company has been doing of late in terms of the results. And then we're going to look at technical analysis also, where we analyze, do multi-time frame analysis from the monthly time frame and going down to the weekly and then the daily, and also finding the entry points, exit points, targets, and also finally how much you should allocate. So that's what I've been doing in the previous videos as well. In case you have not watched the previous videos, stock recommendations that I've done, you might want to check them out. Again, you'll find the link in the top right corner. Click that link and check out those videos as well. And today let's move into the first stock. The first stock today I'm going to look at is Satia Industries, or SATIA. Satia Industries is from the paper in the manufacturing space. This company is a very interesting company. Okay, so let's take a look at the fundamentals itself. So as I always use screen reader in, you can go here and check out this company's details, right? So it is it's a pretty old company. It's been there since 1980, and it's one of the biggest and completely integrated wooden agro-based paper manufacturer company. So which means it's probably integrated end to end, and it does supply books, directories, envelopes. It's basically one of the key players in this segment. And if you look at some of the more details in this company, what it does, it accounts for textbook operations across India account for 40% of the company's revenues, and the remaining comes from public and private sectors. Right, it does have some decent capacity, and you can also look at the geographical presence. Now it's more focused on India, and this company came into my scanner this week, and that's why I'm talking about this company in this week's video. So it is a pretty decent sized company, around 1,000 crore market cap. It has a PE of 11.8, ROC 11.6. Not bad for a company in the paper manufacturing space, because it's more of a commodity, and this company is been doing well, and it's also continuing to do well from a financial perspective. Right, it does have decent cash in its portfolio, so any debt can be easily covered, so that's not a problem. And as always, let's look at the PE ratio and historically how the PE has been looking. Right, so stock posted its highest ever sales in Feb 2020, and then the COVID kind of pandemic took an impact on the stock, and it kind of went all the way down, and now the earnings are again starting to pick up, and that's also one of the reasons why probably the stock is also showing some signs. And the stock is, for me, it's not very highly valued. The company is available at a pretty decent price, and it has one of the highest ROE and ROC amongst the paper industry companies. Right, so among the paper companies, it has one of the highest ROE and ROC. So also looking at the quarterly results, so right now it posted a 216 crore in sales. Now this is one of the highest sales after September 2019, and it also posted a very good profit of 29 crores. Right, so it's one of the highest profits ever posted, and it does look interesting. Also, the interest, if you see, interest has been pretty low. I mean, they don't pay much interest there, so that's also not a worrying sign. It doesn't have too much of debt in its books. Looking at annual reports also, the company posted some really good revenues back in 2020, but due to the pandemic it did get affected. But I think of late it's again picking up pace, and this company might also do well in terms of revenues and profits going forward. Now the important thing to notice here is the operating profit margin. Right, so operating profit margin has risen from 9% went to 16, 20, and right now it's at highest 0.23%. And I feel this is what is driving the share price higher. There is some operational efficiency coming in the company, and that's one of the primary reasons why I want to look at this company today. Okay, borrowings have risen slightly from 270 crores to 300 crores, but also the sales and profits are increasing, so I don't see that as a major problem. And majority of the company is held by promoters. 51% of the company is held by promoters, and the remaining is held by public. Right, so that's from the fundamental perspective. Now it's always important to look at the fundamental perspective before you jump into the stock itself, because you want to ensure that you're holding a decent company, and any change in price, there's no sudden change in price because of some weak fundamental reasons or some other reasons. Okay, so that's the first part. Now looking at the technical analysis, which I always do, you always have to combine technical and fundamentals, right? So I am starting with the monthly charts here. So if you look at the stock has risen, since 2015 it has gone up from 1 rupee all the way to 100 rupees. So that's a 10x return already in the last 6-7 years, and the stock has been going sideways of late. Now if you look at the overall trend of the stock has been forming higher high and higher lows. It's still in an uptrend in the longer term charts. Short term charts, maybe it can have a short term downtrend, but overall it is in a long term uptrend. Right, and recently if you see, what's happening here is this company, this share price is kind of breaking out from a decent symmetrical triangle. Right, now symmetrical triangle, in case you don't know what this is, you can check out the analysis of the details of the symmetrical pattern in my blog, and you can find more details on it. Again, the video can be found, the link is right there on the top right corner. You can click on that and try to find the more details on this stock. Okay, so now looking at the stock itself, right, so it is coming out of a long term, not a long term really, but 1.5 year, 1 year kind of a symmetrical triangle pattern, and it is breaking out this week with amazing volumes. So volumes have been pretty good, and that's one of the reasons why I'm recommending this stock today. And it has been in a tight range in the last 4 weeks, and it's coming out of the tight range, and now it's heading higher. So now looking at the entry points, now you can enter the stock right now, but if the market stays continues to remain weak, the stock might go sideways or might correct as well. But it makes sense to take a small position right now. Probably allocate, if you want to allocate 5% of your capital, allocate 2.5% of that right now, 50%, and then you hold on to the stock for much higher returns, right? So you can enter right now. It is breaking out, volumes have been excellent, and if you want to stop loss, the market is weak, so I'm keeping a little deeper stop loss because I don't want to get stopped out also. So stop loss is going to be around this low, which is around 20%. So in case you're a little aggressive, your stop loss also can be around this low, right, around 91. But given the market conditions, I'm going to keep it a little bit conservative, and I'm going to keep my stop around 86, right? So 86 is going to be my stop for the stock, and the entry price is currently at 108. Any dips can be used to buy the stock, especially if you get a dip towards 90 levels, then definitely it's an opportunity to buy the stock, right? So that's the entry point. The next question obviously is the targets, right? So targets, I'm looking at all-time highs. So I'm expecting the stock to head to 140 levels in the short term, probably in the next 3-4 months. And then from there, if it crosses that all-time high, then we can see much higher levels in the stock as well, right? And the last point is obviously the allocation. How much do you allocate? As I always say, try to allocate 5%, not more than that, especially given the market conditions are weak. And if your stop loss hits, you will still lose 1% of your capital. So let's keep that simple and don't overcomplicate it, right? So that's the first stock, Satia Industries. Now, in case you liked my analysis and you've been watching my videos, and if you did like my analysis, don't forget to hit the like button and like my video, because that's going to ensure that the YouTube algorithm spreads my videos to more viewers. So definitely, if you're watching the video, do like that button, hit that like button, and show some love while we move to the next stock. Okay, so that's the first stock that I want to discuss today. The second stock is from it's a more diverse business. It's called Security Intelligence Services, and most of you would be aware of the stock, and this stock is also doing quite well in terms of revenues and profits. So let's take a look at that stock, which is the second stock for today, which is Security Intelligence SIS Limited, right? So so this company is very interesting actually, right? So this company was listed back in 2015 or so 2018 around, and it has been going sideways since then. But some of the interesting stocks, this is one of the interesting stocks that I posted on Twitter as well. So in case you're not following me on Twitter, follow me on Twitter, because this stock is already on Twitter. I posted it around a week back and it's already up a little bit. So still better late than never. And let's look at this stock today. So Security and Intelligence Services India is directly, it's more than security related services. They provide, guards for companies, they provide training, and they have also some other services. And they also, are responsible for shipping the cash that the banks require. So if they want to move money from RBI, from the headquarters from Mumbai to a bank across India, they are involved in the services and they have a very good market share there, right? So you can go through this company. They are security solutions. 41% of the revenue comes from there, and remaining 43% comes from cash logistics, where they have a joint venture with Prosegur, and they provide secure cash in transit, including transportation of banknotes and other valuables. Now that's an interesting business, right? Not many companies are in this business, and SIS holds 49% stake in that venture, which they have, right? Now, one thing that this company is also doing is they are looking to be a leader. Now this market that they are in, be it the security solutions or facility management, it's more of an unorganized space where not many companies are actually providing service there. So for example, you might find you can just go to your village and get one person who wants to do a security job, and you can just get him for your company. But this company is trying to make that more organized, right? And that's one of the key objectives of this company, and they want to make this shift in the industry, and they want to group these unorganized players, and they want to make this more of an organized industry. And if it becomes organized, then they are one of the biggest players, and they might get benefited really well from this change in this industry. Okay, so looking at the numbers, ROC is 30, 35. So it's pretty good numbers, very, very good numbers. And the stock is trading at a 24p. It's a pretty, decent sized company. It's around 8,000 crores market cap. So I'd not say it's a very small company like Satia Industries. It's a pretty decent sized company. And just looking at the history, Now this analysis helps you to understand what the stock has been doing, right? The stock listed at a P of 60 when the EPS was 11, earnings per share was 11, and today the earnings per share is around 22, whereas the stock is trading at a PE of only around 20-23 levels, right? Now it looks like the bottom is in place for the stock, and definitely the sales have been increasing of late, and overall this company is definitely destined to benefit from this growth in this industry. And I also feel that the stock also might do well going forward. So look at the quarterly numbers. They've gone up from 2,000 crores to 2,600 crores. And looking at the annual numbers, they were listed around 2000, I think 18 around they were listed. And today they almost double their revenues and almost double their profits. But whereas the stock is still not moving aside, right? So the stock is just starting its upward journey. We'll look at that shortly. But look at the profit numbers. Compounded profit in the last year is 52%, sales is 16%, and overall it's a fantastic company. They have been taking some loan and they've been paying some interest, but that's obviously to expand, and the interest also has dropped from 150 to 50 crores to 100 crores. Okay, the reserves have been rising as well along with their borrowings, and this company is predominantly held by shareholders around 74%. Now here if you see, FIs have increased a stake as well. FI has increased a stake from 10 to 15% in just last couple of years, and that's also probably one of the reasons why the stock is now starting its journey higher, right? So that's the fundamental analysis of this company. And if you do have any thoughts about this company, I'm sure a few of you have and heard about this company, do let me know in the comment section so that we can have a discussion about this company in the comment section as well, right? And don't forget, if you did like this video, also comment in the video saying that it was a good video, or let me know your thoughts, and that will also help us in getting this video to a wider audience. So next, as always, let's look at the technical analysis, which is my favorite thing that I do. Now technical analysis tells that this stock was listed in 2018, 2017, it went all the way up, and then since then the stock has been in a steady downtrend. Now what you want to notice here in this stock is the very strong support that you have around levels of 350 odd levels. So from a long-term perspective, anytime the stock comes to 350 levels, it's definitely worth buying, but I doubt it will come again to this level, okay, because the stock is breaking out, and we might not see levels of 500 again, 400 again, 300 again in the many years to come. And the next thing I want to look at is the pattern here that you're forming. So this is multiple touch points. We had 3 touch points here for a trend line, and that makes this a very significant trend line. And this is a descending triangle pattern, and the stock is just breaking out from this zone here. And if you look at the last 2 years, there's been a lot of buying in the stock. Volumes have been excellent, and a lot of people have been accumulating the stock, and that's why probably the FI numbers have increased, and this stock is looking really good to head higher from here, right? Also notice, in spite of the markets going down, this stock has been going up, and that shows that this stock is relatively strong in compared to the benchmark of Nifty or small cap index. While all of that was been going down, this is going up, right? Now here, what would be my stop loss, right? So the entry point first, you can enter the stock right now, this market price. It has definitely broken out. It also had this breakout here, rectangle consolidation breakout, and it is now trading above those levels. So definitely it is worth entering at the current market price. And I want you to keep a stop loss around this low, which is around 430 levels. Now that's around 110 point stop, which is also around 20%. Now if the markets are good, I'd have kept my stop loss here around this point, but if the markets turn bad, there's every chance that the stocks would also come down. Now remember, as I said, the stop loss is around 20%, so it's pretty little deep than what I usually tell you. I usually give 10% stop losses, but now you need to ensure that you have a decent stop loss. So in case the market turns around and comes down more, then you don't want to be stopped out. Okay, so that's the entry point, and that's the stop loss. Now obviously the next point is targets. Now I'm not sure, do you have any targets in your mind? If yes, let me know. But otherwise, for me, the first target is around 600 levels, which is here, 625 levels around, and then we're heading towards 700, which should easily be achieved in the next 1 year or so. And then from there it's into new highs, and we're going to see much higher levels, probably a 100% return from here, which could take the stock to even 1200 levels. Okay, so that's the second stock that I want to discuss, Security and Intelligence Services. Volumes excellent, trend line breakout, fundamentals excellent, and everything is set well. We just hope this stock goes in our favor. Okay, so that's the second stock that I want to discuss. Now, before we jump into the third stock, in case you've been wondering how do I learn all these things that I've been speaking about, it's not very easy, but it's little hard work is required. So if you have the hard work and the determination, then you could spend time reading the books. And I mentioned this in one of my newsletters. The very first newsletter I mentioned, there are 2 books that you could focus on and read if you want to learn technical analysis. One is How to Profit in Bull and Bear Markets, written by Stan Weinstein. That's a fantastic book for a beginner. You can really understand technical analysis through that book. And the second book is How to Make Money in Stocks by William O'Neill. Right, these 2 books, the link would be available in the newsletter, so it should be available in the description. Do check it out, and you can start with these books and spend this time next few months when the markets are correcting and consolidating. Spend the next few months understanding what you should be doing, because the next the bear market won't last much. There are many stocks going into bear market mode, and this will not last for many years. It has to eventually, bull markets long laster than bear markets. So don't get depressed because you're losing money and all that. Try to learn and educate yourself. Okay, so let's look at the third stock today. Third stock is SPIC. Now, the moment I said SPIC, most of you would be like, I know this company, right? So because SPIC has not given returns in the last many years. The stock has been going sideways for many years, but there is fundamentally something changing in this company, which I noticed in this quarter's results, right? And let's look into that without any further delay. And as always, we're going to start off with fundamental analysis. So SPIC, or Southern Petrochemical Industries Corporation, right? So that's the stock that we're discussing now. Now this company is in the it's in the selling of urea and manufacturing of urea, so it's more in the fertilizer space, and this stock has been there for many years. It's a very small company, around 1,000 crores market cap. It has ROC decent of 12.5. That's primarily because of this quarter results. Otherwise, ROC wasn't that great, and ROE is also good. Whereas stock is trading at a PE of 7, right? Now, promoter holds a decent 52% of the shares, and it also has a good interest coverage, which means they can cover the interest. They have the money to pay off the interest in case they have, right? They have 10 times the money that they have to pay off the interest. So that's a number that you might just want to take a look at. So let's look at the, as we always do, let's look at the numbers, right? Now, I'm just going to focus on the last 5 years. The last 5 years, if you see, the stock has been, going sideways. And this quarter, the earnings per share has gone up to 7 rupees, earnings per share, 7.5 rupees. Now, previously, if you see, that was around 2 to 3 rupees, and this quarter has gone to 7 rupees. And the stock is still, in terms of the stock PE, it has not been much high, right? It has not been very high. It's still hovering around 6-7 levels. Now, that's why I want to look at this company today. I want to recommend this company as well, because from the fertilizer space, this company has been there for quite some time, and suddenly something is changing in this company with in the quarter results. So September 2021, if you notice, the results have been excellent. It has posted a 616 crore in sales. It obviously posted 689 crores before, but along with this, if you look at the operating margin, right, operating margin is what is changing there. And if you look at the expenses over here, so we have 616 crores, and if you see expenses here around 66-64%, and then you have a very high operating margins around 12%, right? Now that shows that something inside has changed in the company. Now I'm not sure if it's right, but some of the input costs have changed. They are using some of the input costs, which probably is increasing their operating margins, and that's one of the reasons why I'm looking at the stock today, right? A 12% margin, it has been improving of late from 3% to 6% to 9% to 12%, right? And this quarter, the profits have been at 62 crores, which is almost double than the profits it had in March, double than the profits it had in December 2018. Looking at the annual sales, this company has been steady, right? It hasn't really increased its sales much. So in 19, yes, it did increase its sales by a significant amount, but then it again dropped because probably of the pandemic. And now I presume that this year is going to be a fantastic year for this company, and we're expecting some really good profits in this year. Already profits have started to rise, right? So from 67 has gone up to 74, and this year probably we're expecting a really good set of numbers in terms of profits, and that's probably why the stock is now starting a new journey, right? So component profit go to 20%, and it has cash reserves now. The debt has come down significantly. Now that's also one of the reasons. If you look at here in the P&L, the interest has dropped, from 34 crores to 17 crores, right? 34 crores to 14 crores, and this here if you see, we have interest has risen, right? So around 8 crores, but overall it has dropped, right? So look at the annual numbers. That might give you a better idea in terms of the interest. It has dropped to 14 crores, and here also if you see, the borrowings have also dropped, right? Now, The last thing that I want to check is, the ROC I already showed it's increasing 13 to 12%. So it's been stable of late and it's been increasing as well. So that's from a fundamental perspective. Now, the only reason that I'm looking at this company from a fundamental perspective is that increase in operating margins, and I presume that this company might, be able to sustain those kind of operating margins and operating profits. So that's a fundamental perspective. And looking at the technicals of this company, which is the next thing that I want to see. So from a technical perspective, this company, I'm just going to look at the monthly charts just to tell you what this company has been doing since 2000. Now, this company has been listed for 22 years, and it has not really given much returns, right? It's been going sideways, and it is at an inflection point according to me. Now what I'm expecting here is a breakout from here, right? So if it is able to cross 70 levels in the next few months or in the next year, then that signals a start of this journey, and that could give a really good move in the stock, and we might see the stock doubling or tripling from here. Now it's a purely trading bet, because I'm just going to invest the money with a stop loss, and if I hit my stop loss, I'm out, right? Now that's the reason why I'm looking at this company. Now the second reason that I want to look at is, if you go to the weekly charts, you will see that this also had a trend line reversal, and it is sustaining above the trend line, right? So if I just draw this line over here, you see that this stock has reversed from here, and again it is reversing from here. So which means you enter the stock at current market price, and you keep a stop loss from the current market price. If you look at the stop loss is around 17% stop, which is around 43 levels. So the lows of 43 is my stop. You can keep it low as well, but 43 is a very strong zone where I see demand coming in again and again. So if the stock doesn't go below 43, until then you can hold on to the stock, and then if it comes back again above 43, once your stop loss is hit, then you can enter the stock again. So that's one of the reasons why I'm entering. So enter current market price with a stop at 43, and we're looking for targets of much higher levels. So first target for me is there's no resistance above levels of 70, so 68 around. So 68 is my first target, obviously, and above that we can look for even targets of 100, right? Now don't get sold with my target dreams. Now most of you would have seen on social media that some stocks are going 100%, 200%. People give targets of 4x, 5x. That's all just dreams. Don't get sold off to those dreams. Have some patience and keep your stop loss. Invest 5% of your capital, and if it does well, then you can add another 5% of your capital to that stock, and just find a good entry point always, and ensure your stop loss is always in place, right? It doesn't matter if a stock goes down or up. What matters is the money that you have earned, and that money should be saved. Right, so these are the three stocks I want to discuss today. And in terms of allocation as well, do not allocate more than 5% of your capital unless trading really well. And if you've been hitting stop losses continuously in this weak market, then do ensure that you don't take positions immediately after a stop loss is hit. Give it some time, let the market settle down, and let the markets tell you that I'm going up, and then go ahead and invest your stocks, right? Invest your money in the stocks. Otherwise, I'm going to leave you here. If you did like my video, don't forget to hit that like button before you leave, and also don't forget to subscribe. We are growing, and I want your support here for me to do such videos every weekend. And if you do want to learn, do follow me on Twitter, do follow me on subscribe to me on YouTube, and you can learn definitely along with me. Also, I did make another video last week about the inverted head and shoulders pattern. So in case you want to learn inverted head and shoulders pattern, don't forget to also look at the video link shared here, and you might gain some knowledge on that front. Okay, so thank you. Stay safe, stay healthy, and always keep your money safe. Whether it's investing, trading, whatever it is, ensure your money is secured first before you do anything else. Okay, thank you. Stay safe and stay healthy before I see you in another video. Bye bye.